Okay, Assalamualaikum. Good afternoon, and welcome to the presentation of the economic outlook and policy priorities. And I'm Dia. I'm the head of graduate program in economics, and we are honored to have Mr. James Walsh from the IMF. He is the senior resident for Indonesia. He's going to share the IMF's view on the economic outlook as well as the policy priorities for Indonesia. How are you, Mr. Walsh?
Very well, thank you. It's nice to meet everyone.
Yeah, it's nice to meet you online. Hopefully I can see you offline too.
Well, I hope so soon.
Yeah. Okay, we are going to also have Novi Maryaningsih, our PhD candidate, as the moderator for the presentation and the Q&A session. Okay, Novi Maryaningsih.
Yes.
I write it wrong.
That's okay.
Sorry for
That's okay.
Okay, so Novi did her Master of Art in Economics from University of Michigan. And before joining our PhD program, she was a senior economist of Bank Indonesia. So she is the central bank guys who know it, and writing about dissertation on the digital currency using macroeconomic model. Is that correct?
Yes, Budia.
Okay. I think we need to start the presentation. So I will let Novi to lead the presentation and the Q&A session. So Novi, this is time is yours.
Thank you, Budia, for introducing me. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon. The Honorable Electors of the Faculty of Economic and Business Universitas Indonesia and the Honorable all participants of this public lecture. Ladies and gentlemen, I am delighted to see you here and welcome all of you to today's public lectures entitled Indonesia Economic Outlook and Policy Priorities. Today, public lecture will cover the first one, how the COVID-19 pandemic, including the current Delta variant, affected Indonesian economy. The second one, what has Indonesia response been from fiscal, monetary, and financial system policy to mitigate the impact of the COVID-19 pandemic? The third one, how has the economy response to the fiscal, monetary, and financial system policy? And the last one, we will come up with the conclusion, what are the priorities going forward for Indonesia after the COVID-19 outbreaks? Our speaker today is Mr. James P. Walsh. He is an IMF Senior Resident Representative Office for Indonesia. He was an advisor in the Monetary and Capital Market Department before being assigned to Indonesia. He has a lot of analytical work covering financial regulatory reform, macro-financial linkages, inflation, financing infrastructure investment, and systemic financial risk. He also a co-editor of a book on ASEAN financial system. He worked in the IMF Policy Design Department, assessing the IMF surveillance of developing economies. He holds a PhD in economics from the University of Chicago and a BA in economics from the University of Pennsylvania. Ladies and gentlemen, before the presentation begins, let me inform you how this event will be going on. First, Mr. Walsh will be invited to present the material for 45 minutes until around 2:55 p.m. After that, there will be a question and answer session, following by a conclusion for 35 minutes, and this public lecture will be expected to be closed at 3:30 p.m. If you have any question during this public lecture, please add them to the Zoom chat feature, and we will able to answer some of the during the question and answer session. You can drop your question both in English and Bahasa. We will translate for Mr. Walsh if you deliver your question in Bahasa. Now, allow me to welcome the speaker, Mr. Walsh, to deliver his presentation. Mr. Walsh, the floor is yours.
Thank you very much, Budia, Bu Novi, for organizing this seminar. As Bu Novi said, I will talk for about 45 minutes about a range of topics, and then there will be a question and answer session. I'm happy to answer any questions people have about the IMF or how the IMF sees Indonesia. So maybe I'll go into the presentation. Can you please put up the first slide? So the next piece. So as Bu Novi said, I will talk about 5 different topics. First is, what is the IMF and how do we the background noise. Yes, please put their, okay. Second, I'll talk about COVID and how it has affected economies around the world. Third, what different countries can do to affect COVID, and what Indonesia specifically has done to try to deal with the damage that COVID has caused. And fourth, how do economies respond to these measures, and how has the Indonesian economy responded to the measures that the government has taken to address the crisis? And finally, what do we do next about this? How do we think about the world economy going forward, and what should Indonesia do to make sure that we can come back to a position where there is strong and inclusive growth around the country? So next slide, please. So first I'll talk about the IMF. The IMF and the World Bank were founded at the end of World War II in 1944 by the countries that were at the time about to win the Second World War. And the idea was that they would set up 3 organizations: the International Monetary Fund, the World Bank, and the Global Agreement on Tariffs and Trade, which would help countries coordinate economic policies after the war. There had been a lot of issues in the 1930s where countries had pursued economic policies, namely protectionism and devaluing their currencies, that had reduced global growth and made it very difficult for economies to grow. So the Allies at the end of World War II thought it would be good to have a global organization that would allow countries to work together. And the IMF was set up to help countries coordinate their policies on exchange rates and on international financial transactions. The Global Agreement on Tariffs and Trade was an attempt to have a forum for countries to discuss trade policies and tariffs. That was renamed the World Trade Organization later on. And the World Bank was designed to help countries rebuild after World War II. All of these organizations have changed a bit over time as the global economy has evolved, but that's still the main division of labor, that the IMF helps countries discuss financial stability and monetary and policy cooperation on macroeconomic issues. The World Bank tries to promote economic development and poverty reduction around the world. And the World Trade Organization tries to coordinate countries' policies on trade issues. So the next slide, please. So on a day-to-day basis, what does that mean for what the IMF does? I think people tend to associate the IMF, especially perhaps in countries like Indonesia, with lending in times of crisis. And that is one of the things we do. But there are 3 areas where we would like to emphasize how we can help countries. So the first one is on policy advice. We publish reports twice a year on the global economy, the global financial system, and the global outlook for fiscal policy. And the idea behind those reports is to provide some information about how the global economy has evolved, what we see as the prospects, and what we see as the main policy issues that countries have. We have a unique place since basically almost every country in the world is a member of the IMF. The United Nations has 193 members. We have 190 members. It's nearly a universal membership. So we can take lessons from all over the world and present them in our multilateral reports on the World Economic Outlook, the Global Financial Stability Report, and the Fiscal Monitor. We also provide policy advice to individual countries. These are called Article 4 consultations. With almost every country, we do these consultations every year. The last one in Indonesia was done in early 2021, and we'll be doing another one in early 2022. I'll come back to that in a minute, but this is another case where we do try to take lessons from around the world and apply them and give advice to country governments in a context where we hopefully can pass lessons from one country to another. Second, we do lending in cases where countries are in an emergency situation. Right now, we have the ability to lend about $1 trillion to our member countries. We do this when they are encountering balance of payments problems, and we also do it when we provide funds to countries when they undergo a natural disaster or an emergency. So where this has been important recently is at the beginning of the COVID pandemic, we provided emergency assistance to a very large number of countries, I think about 100. And these emergency programs are not large, but the idea, what we try to signal with them is that we are there to help countries when there are problems, and that if they need funding to get through a difficult time, we are there. We also have precautionary programs, which quite a few countries in Latin America take, where they have access to a line of credit that we make available, but they don't have to use it unless they need it. And the idea behind a lending program like that is if a country does run into difficulties, there are issues with the currency, there are issues with other forms of sustainability, they can use that extra credit line from us to bolster their own reserves and maybe gain some more credibility in international markets. So those are two of the ways we lend. And I would point out that to very low-income countries, to the poorest countries around the world, such as many countries in sub-Saharan Africa, Central Asia, and the Middle East, and a few countries in Asia, we lend at very low rates of interest. It's effectively a zero interest rate loan to those countries. To middle-income countries, the rate is a little higher, but it is still below the market rate that countries would get from borrowing in the private markets. And the third area that we try to work with countries on is capacity development. So we will work with countries on how to implement different kinds of policy. So for example, when I was in our monetary and capital markets department, I worked with countries on how to design monetary policy systems. So in Indonesia, there's quite an effective system of an interest rate corridor that determines monetary policy. I did a project where I worked with another government in sub-Saharan Africa on how to establish such a corridor in their country. Or we will provide advice on something like systemic risk in the financial system, or how to design taxes, or how to improve expenditure management. So in some cases, we do that with a team from Washington that goes to the country to work with them. That's what I've done. And right now, that's all we can do. Because of the pandemic, we have to do things remotely. But we do have regional training centers around the world where we can send officials from different countries to go and take classes, and we can help train them in how to do particular aspects of economic policy implementation. And at the same time, they meet other professionals from the region, from other countries, and they can learn from each other's experiences. So these regional training centers, we have about 7 of them around the world. Sorry, I miscounted, there's only 5. But the closest one to Indonesia is the Singapore Training Institute. And we also have a regional training and assistance center in Thailand that does some work with some of the other countries in the region. But Indonesia has been quite involved in the Singapore Training Institute's programs. We've sent quite a few people from the finance ministry, from OJK, from the BI to Singapore for training in these areas. So this is a third area where we hope to develop countries' abilities and strengths in implementing economic policy. So that's those are the three main areas that we work with countries: providing policy advice, providing capacity development to help countries better implement economic policies, and lending to countries when there's an emergency and they need help. So the next slide, please. As there was a little video before the seminar began, And as was mentioned in that video, since the global financial crisis, we have moved into some new areas for helping countries with economic policies. One concern that has become particularly prominent since the global financial crisis is the importance of making sure that growth is inclusive and benefits everyone. For the IMF for a long time has tried to focus on making sure that countries are able to support the poor. We try to make sure that our lending programs are pro-poor and that they protect spending on areas like health and education and necessary support for low-income people. But we've tried to broaden that focus in the last 5 to 10 years to just think about things more broadly. How do we make sure that even if the poor are protected, that they have access to good jobs? How do we make sure that middle-class jobs remain in countries where there may be some hollowing out or concerns about the sustainability of a middle-class lifestyle? So we have tried to focus on that more, and we do a lot of work, particularly in low-income countries, to make sure that growth is more inclusive. Second is climate change, which is, as everyone probably knows, one of the, if not the most important challenge that the world will be facing in the next few generations. I don't know what would be. So we try to help countries implement carbon taxes, implement macroeconomic policies that can support an energy transition. And we also work with countries on how to design globally consistent policies and as a forum for discussing these policies. That will be particularly important for Indonesia next year when Indonesia takes over the G20. The G20 is a very important forum for discussing climate change, and Indonesia is a respected voice within that group. And this will be an important opportunity for Indonesia to talk about how a country like Indonesia can move towards a cleaner future and what other countries can do to help us all in that process. The third area of new work that I would mention is gender. The fund and many other economists over the last 10 to 15 years have put more effort into thinking about how economic policies affect men and women differently, and to make sure that growth is truly inclusive and to make sure that we take advantage of all the resources we have. We do try to focus a lot of our analysis on this gender implication. Do the programs or the kinds of reforms that we talk about affect men and women equally? How can we make sure that women are brought into the labor force and that that economies and societies can take as much advantage and making sure that women have as much opportunity as men do everywhere. So those are the three new areas that we're really looking at and where we're trying to share lessons across countries. So next, please. So in terms of the IMF's role in Indonesia, Indonesia joined the IMF in 1954. So we've worked with Indonesia for about 60 years now. And that's part of that has been through the Resident Representative Office, which was opened in 1967. I am the 21st resident representative in this office. I'm pretty sure that Indonesia was the first resident representative office that the IMF opened around the world. I have not yet been able to get our historian to confirm that, but I think this was the oldest one in the world. So it's an honor for me to have the job now and to follow a number of my predecessors who I know and respect a great deal, and to learn from such great country authorities here and to talk to people like the students here at the University of Indonesia. My office is supposed to coordinate the relationship between the IMF in Washington and the Indonesian authorities in Jakarta, and also to try to explain to people how the IMF works, how we can help Indonesia, and what we can learn from Indonesia as well. And as I said earlier, one of the ways we do that is through our annual consultation, where we provide policy advice to the authorities. Indonesia's first consultation under the Article 4 was published in 1955, and the most recent one was published in January of, this says 2020, but it's 2021. These reports assess what's going on in the Indonesian economy and what our policy recommendations are for addressing those challenges. So for example, our report that was published earlier this year, it does talk about how Indonesia has dealt with the COVID pandemic and what we see as the priorities for the central bank, the Ministry of Finance, OJK, other organizations and entities within Indonesia. What are their priorities to try to make sure that Indonesia can get safely through the pandemic and how we can best rebuild after the pandemic is over, or as we maybe it will never end and we'll just have to get used to it, but certainly after this chronic phase that we're in right now. So next, please. That's a natural segue to talking about how COVID has affected the global economy and how it in particular has affected Indonesia. So next, please. So I think, as everyone probably knows, COVID has had, this has been the biggest shock to the global economy in probably a century. At the beginning, we really had no idea how large this was going to be. And there were serious concerns that we were going to enter another Great Depression, like what happened in 1929. In the end, the short-term damage was very, very, very steep. But countries have generally managed the pandemic, or at least economies have managed the pandemic, maybe a little better than we expected. So what I would point out here is the top row is how the IMF saw the global economy evolving in 2020 at 3 different times. First is what we thought before the pandemic about global growth. So the upper left-hand corner is in October 2019, before we were aware of the pandemic, we expected the global economy to grow at about 3.4%. And that would have been led by the Chinese and Indian economies growing at almost 6% and 7%, with Indonesia and the other ASEAN countries growing at about 5%. In the end, by April 2020, which was this very severe phase of the pandemic, we had revised all of these forecasts down quite substantially. So instead of an expansion in the global economy, we forecast a negative 3% growth rate. Indonesia was marked down from 5% to 0.5%. And you can look at any of these other countries. We had substantial downward growth revisions. The US economy, we expected to shrink by 6%, the Euro area by 7.5%. Again, this was the most acute phase of the pandemic. In April of 2020, we had no idea how bad things were going to get, whether they were going to continue as badly, and whether the pandemic would continue to grow as quickly as it had in February and March. So this was the worst time of it. And then the actual realization at the end of 2020 is the third line. So in the end, the global economy contracted by a little more than 3%. Some countries did a little better than we expected. So for example, the Euro area and the US didn't shrink by quite as much as we expected. I will come back to why that happened. Some of the emerging economies, however, did significantly worse. So chief among these is India, where the economy contracted by more than 7.5%. And Indonesia also contracted by 2%. So not quite as bad as India, but substantially worse than what we had forecast. The next set of numbers here talks about where we think that 2021 growth will be. So what I would encourage you to think about with this is that there is we talk about a 2-speed recovery right now around the world, where some countries, those with high vaccination rates, such as the US, Europe, China, now Japan, these countries will be able to expand a little, to normalize their economies and bring back economic activity more quickly than countries where vaccination has been slower. Vaccination has been slowest in sub-Saharan Africa and in some parts of the Middle East. Those countries, we're talking about 1.5 billion people in these countries, and the need to vaccinate them and to allow them to reopen their economies and strengthen growth is, if not, it's certainly the top policy priority that we feel the world should have right now. And that's quite a difficult policy to achieve. But at the moment, we do have this 2-speed recovery between places like Europe and the US that are growing quickly, and then places where vaccination has gone at a slower pace. Indonesia, unfortunately, is in that second category. So as you can see, in October 2020, we expected the US economy to grow by about 3%, but the pace of vaccinations accelerated quite substantially in the US after that. And by April, we had forecast that there would be a boom in the US of about 6% growth. That was revised up to 7% in July, but we're going to be revising it down again because of the Delta variant. But still, the point here is that the US economy is growing very quickly this year, even with the Delta variant. And that has implications for Indonesia and other emerging markets. On the other side, last year we expected the Indonesian economy to recover quite strongly this year and grow by about 6%. In the end, we've revised those forecasts down, Part of that is because of the outbreak that happened here toward the end of the year in December and January, where there were measures taken to slow the pace of transmission that have a big impact on the economy. And then again, this summer with the current Delta variant outbreak, this has also hurt economic prospects. So I think that 3.9% number is also likely to be reduced. But what I would point out here is the different trajectories that we're seeing. Growth has been generally quite strong, and the recovery has been strong in many of the rich economies, while in middle income countries, it has been a little slower. So we'll come back to why that is important, but that is an important thing to keep in mind. So next slide, please. So talking specifically about what happened in emerging markets such as Indonesia, every country has had a different pace of developments since the COVID pandemic began. The most obvious example is China, where the pandemic started, but where the government was able to impose very strict restrictions early on and close the borders, basically stamp out the virus, and then largely reopen. In China, people were going to movies last summer. Nobody was going to movies in the United States or Europe or Latin America or Southeast Asia. But in China, things were able to normalize pretty quickly. But other emerging markets had relatively similar outturns, and Indonesia wasn't an exception to this. So the two things I would point out are what happened to domestic demand, how do consumers and companies that are investing, how did they react to the pandemic at the beginning? And then how did global financial markets react? So on the left, you can see two different sides of the same coin. In most of the emerging markets last year, there was a very rapid decline in demand. Both investment and consumption fell pretty dramatically in February, March, and April of last year. So where you can see this on the chart is these are average numbers for retail sales and for credit. So total credit includes consumer credit, but also investment by corporations. And with the beginning of the pandemic, credit growth around the world, and especially in emerging markets, fell very, very rapidly. And retail sales fell even more. In March and April, retail sales in every country around the world, except perhaps China, fell dramatically. My favorite statistic about this is that the sales of clothing in the United States fell by more than 90% between March of 2020 and March of 2021. I mean, that's something that we've never seen before, such a huge decline in such a short period of time in retail sales. And as you can see, that happened in Indonesia. Retail sales did recover over the next few months in most countries, and in some countries, credit also recovered. Indonesia's story has been a little different there, and I'll come back to that later. But what I would say is important here is that the experience of a big decline in retail sales and very slow growth in credit, that's universal across many of the emerging markets. There is an issue of how that has changed since then, but this was a very large shock that hit everybody the same way. At the same time, as we had this decline in demand around emerging markets, there was also a lot of uncertainty in global financial markets. At the time, we had no idea what was going on around the world and how serious the pandemic would get and how quickly it would happen. If you remember what March of 2020 was like, first in Wuhan and then in northern Italy and London and New York, there were just city after city had hospitals that were overwhelmed with patients. Nobody knew how to treat the disease and nobody knew how quickly it spread. So what this meant was that investors became very concerned about risk. And as you can see in this chart, in March and April of 2020, that change in the attitude toward risk meant that there was a huge sale of assets from middle income countries like Indonesia. So at the time, there was a huge capital outflow from Indonesia as foreigners sold their holdings of Indonesian government bonds and to a lesser extent stocks and put them into what they viewed as safer assets, such as Japanese debt, Swiss or German debt, or American government bonds. So there was a very big shift in capital outflows in the first and second quarters of last year. That did begin to reverse last summer, in the summer of 2020, and as it looked like economies might recover, and we saw some large inflows. But toward the end of the year, as the pandemic worsened around the world, that optimism tempered a bit, and we saw weaker flows again. At the moment, these capital flows have returned in some countries and have not returned in others. I'll come back to Indonesia specifically. But what I would point out here is that At the same time that domestic demand was collapsing out of fear of the virus all over the world, but especially in emerging markets, we also saw this huge withdrawal of wealth from emerging markets as foreign investors sold their bonds and moved into other assets. So next slide, please. So as I said before, there is a recovery going on in much of the world. And I would say there are three things that determine the pace of the recovery in different countries. The first one is the pace of vaccination. So I think what gets a lot of credit with the pace of vaccinations is that the United States and the United Kingdom vaccinated people very quickly at the beginning of the year, and that allowed their economies to recover. But I almost feel that that sells short what some other countries achieved. The Canadian government, for example, vaccinated more people than the US in about 2 or 3 months. It was an incredibly efficient program. And it's now they've vaccinated more than a greater share of their population than the US has, even though they started later. The Japanese government has also been very effective in vaccinating people. I think at the time of the Tokyo Olympics, only about 15% of the Japanese population had been vaccinated, or maybe a little bit before. But very, very quickly, that's risen to the same level that the United States has, about almost 2/3 of the population. So there's been a very rapid pace of vaccine rollout, not just in the earlier countries that did this, like Israel, Britain, and the United States, but also in many other advanced economies, France, Canada, Japan. So what this means is that the activity that was held back by people's unwillingness to go outside because they might catch the virus, that has declined very quickly in a lot of the advanced world. So in Japan, well, Japan is a little different, but certainly in Canada, the United States, and Europe, people were acting as if things were back to normal until the Delta variant came, and that's the third thing I'll talk about. But what I would say is that these vaccinations happened very quickly, so there was a very rapid change in how people saw their own safety as the vaccination campaign went underway. And that obviously has not happened as much in countries where the pace of vaccination has been slower. So that's true here in Indonesia, but also in India, Turkey, South Africa, the pace of vaccination has been slower. Even in some parts of the European Union, while places like Denmark will have 75% of the population vaccinated, in Bulgaria or Romania, it's only about 30%. It's been very difficult to vaccinate people, even in some parts of Europe. So this pace of vaccinations is a very important factor. And there's a very wide range of speed around the world. The second thing is policy support. Some countries have supported their economies much more than other countries have been able to do. So what they have done is, I'll talk more about the Indonesia case specifically, but most central banks have drastically loosened monetary policy and tried to make it easier for banks to borrow. They've intervened in financial markets to try to support banks and make sure that they have enough cash to lend. And governments have run much larger deficits than we normally do. This is certainly the case in Indonesia, but in the advanced economies, these deficits are historically large. They're very, very large. In Britain, for example, millions and millions of people were being paid by the government because their companies didn't need them, but the government didn't want the jobs to be shut down. So the government just wrote people paychecks to keep them out of the office or out of the factory and still have income to spend. These kind of job support programs were very common across Europe and millions of people from becoming unemployed. They're very expensive. And the third factor I would point out is that has slowed down the economies, the advanced economies more recently, has been these variants and Africa. So the Delta variant, as I said, has led to a very rapid increase in the number of cases and hospitalizations around the world, especially in the US and some Western European countries. And this has had an effect on confidence around those countries and reduced demand a bit. And there have also been aftershocks and the difficulty of reorienting the global economy after COVID. So one area where we see that is the cost of shipping things around the world. At the beginning of the pandemic, we didn't expect that demand would recover very quickly. So a lot of cargo ships were just left in port. But demand never really declined. Demand declined for only a few months in a lot of the global economy, and then it began to recover. So there's been a huge increase in demand for container ships in particular around the world. And this has meant that there's been quite a lot of disruptions. as the cost of shipping things has risen dramatically. And it hasn't helped that while China has been very closed off from the rest of the world, the one area that you cannot close off is your ports. So China has had a few relatively small outbreaks of COVID in its ports, and this has added to the cost of shipping things in and out of China and further led to this kind of stickiness in how the global economy has recovered. But that factor, I think, is the smallest of the three in macroeconomic terms. The main thing to remember is that the pace of vaccination has a huge impact on how people see their prospects and how the economy recovers. Policy support has helped many countries get through the pandemic better than we may have expected before this all started. But some of that has been slowed down by by the new variants we've had of the virus and by the cost of getting things into new countries. So next, please. So there are two implications that I would point out for this. The first one is that because the advanced economies have recovered more quickly, that means that their central banks have been forced to think about what it will be like to return to normal before the emerging markets have. So in the past, we've had different paces of recovery from recessions, but we haven't had this kind of situation where the countries that issue reserve currencies around the world, the Euro area, Japan, the UK, and the US, their central banks, their economies are already beginning to return to normal. Inflation is, it's not high in the US or the Euro area, but it's certainly higher than it's been in the last few years. So there is a concern that the central banks will have to communicate a tightening policy earlier. And also, as the economy recovers and there's more demand for credit, that begins to push up interest rates as well as people begin to borrow. So what this has meant was that at the beginning of 2020, interest rates began to rise long-term interest rates began to rise in the US and to a lesser extent in the Euro area. So that was in an expectation that recoveries would strengthen in those regions. But as you can see, the same thing did not happen in Indonesia. The rates continued to fall at the beginning of this year. So that was partly because of the outbreak here that was affecting things, but it's also because of that outbreak, but even more broadly, the global economy the Indonesian economy was growing a little more slowly. So there wasn't the same upward pressure on interest rates. But what happened here is happening in very many countries. What that means is that as interest rates begin to normalize in the advanced economies, before they do in the emerging market economies, that can lead to capital outflows. So while we need to, at the moment, we need to be bringing credit into the emerging economies. They need to we're trying to help strengthen growth there. But at the same time, because growth has already begun to strengthen in the advanced economies, investors could shift capital into those economies and away from emerging markets. This is the danger of a two-speed recovery, is that the faster growing economies will attract more capital than the slower growing economies. And unfortunately, Indonesia is on the wrong side of that. So in the next slide, I can talk about why that is. So next slide, please. So COVID in Indonesia, to talk specifically about where Indonesia stands in this two-speed recovery, we would divide the pandemic into 4 phases here. The first one, A, was this very acute phase of the pandemic at the beginning of last year, when nobody knew how to treat the virus. Nobody knew testing was very new and very expensive and slow. So we didn't know how many people had the virus. And there was a lot of confusion about how even to prevent it from spreading. So the red line here are the statistics that we use, that Google produces to talk about mobility. So how much do people's visits to offices, to parks, to shopping malls change over the course of the pandemic? So as you can see, in this acute phase, there was a very rapid drop in mobility. This is just in Indonesia, as travel stopped and people began to stay home. People worked from home when they could, and a lot of factories were shut down. So there was a very, very rapid decline in mobility at that time. And then phase B was where people began to get used to the pandemic, and lockdowns were, if not reduced, at least they were optimized in a way that allowed people to be a little more productive while still reducing the pace of transmission. So in Indonesia, cases remained relatively low, though they did begin to rise toward the end of 2020. And then there was another set of restrictions passed toward the end of the year and in January. But during this time, we did get used to thinking about how to operate the economy under COVID. So what this means is that in Indonesia and in many other countries, people became more productive under restrictions than they had been before. So people got more used to doing, for example, Zoom meetings instead of regular ones, but also factories were better at instituting safety procedures or testing to try to reduce the transmission of the virus among their workers. One way that I would, well, I'll get back to that. Then phase C here is the current phase that we're in, or actually we're in a new one now, but the beginning of the Delta variant outbreak in Indonesia, when cases began to rise very quickly. So the peak in mobility here would coincide with the time when, maybe in May or early June, I guess, when things had begun to return to normal in Indonesia, but then after Eid al-Fitr, we saw a rapid rise in cases. And then new measures were brought in to try to control the number of cases. So that would bring us to phase D, which is now cases appear to have peaked with the Delta variant and are beginning to fall. This pattern, where there's a very rapid increase and then a relatively rapid decline, we've seen that in most countries that have had Delta variant outbreaks. So the same thing happened in Bahrain and in the UK, or sorry, not the UK, in India, when they had their large outbreaks. And now it's also happening here. And even since this, cases have fallen even further. I think Minister Luhut said the other day that cases have fallen by 95% from their peak. So this is what we tend to see as countries not only impose new measures to try to reduce the transmission, but we've become better at keeping the economy functioning during these times. And the example I would cite here is that Indonesia's manufactured exports and the manufacturing capacity of the country have not been reduced as much this time around as they were back in phase A. If you were to look at the factories in West Java and near Jakarta that were operating and provide a lot of exports for Indonesia, during phase A, these factories were closed. But during phase D, we've been able to keep them open, and that has helped keep people in work and helped strengthen the economy during that time. But as I said, now we're in a period of reduction of cases. So next slide, please. So the problem is that because the pandemic has gone on for so long, this leads to a lot of damage in the economy. We call this scarring, and there's a number of ways that the economy can be scarred by such a long period of dislocations. So the first one I would point out is that companies, well, this is the main one I'll point out just in the interest of time, companies have become much less profitable during the pandemic. So some companies, such as hotels, have had to remain closed or are open only with very limited capacity. Restaurants are in the same category, but even retail operations, those that have not been able to move online, that are dependent entirely on people coming in, they have their profitability has really declined. And also the weakness in the economy means that very few companies are able to invest. So the companies that profit from investment, so construction companies or banks, these have also been hit. So the profitability in Indonesian companies had already been falling before the pandemic, but it's fallen substantially during the pandemic. And this is going to be a concern going forward. Companies have to see profitable opportunities to invest in order to strengthen the economy in the future. And those opportunities have not been found by a lot of Indonesian companies recently. So going forward, there's a number of ways to think about that, but that is a real issue, that corporate profitability has been weak in Indonesia and falling over time. And one area where that matters is what we call firms at risk. So what this number means is how many Indonesian companies don't have enough earnings right now to cover all of the interest payments that they have to make on their debts. So this matters because as the economy recovers and as companies see more opportunities to invest, they need to be able to borrow to expand and then pay back those loans. But if they don't have enough money to service the debt that they have now, it will be difficult for them to expand further. And in a case where we are relying on investment to drive a recovery and to drive longer growth, we need to make sure that companies are profitable enough to do that And as it turns out, many of the companies in Indonesia are not. So again, this is not a factor that's only relevant in Indonesia. Singapore has a high percentage of companies that are in the same situation, so do Malaysia and Thailand. But these will be a drag on the economy in the future. So next slide, please. So the question is, what can countries do to try to support the recovery? So next. So the first thing I'll do is talk about what different countries do, because it's very easy to think that every country operates by itself, and that and to ignore the fact that there's a lot of experience around the world with doing this, and this has been a time when different countries have done different things, and there's always lessons you can draw from what other countries have done. So I'll talk about 3 areas where countries have been quite different in how they handle things. So the first one is how much budget support, how much government support have countries been able to provide. So this left chart shows what different emerging markets were able to do, how large were their support packages. So as you can see, some of the Latin American countries, such as Brazil and Peru, had very large packages. They were able to spend almost 20% of GDP to support workers and the poor and healthcare expenditure during the pandemic. At the other extreme was Mexico, which had a very small package at the time. And the Philippines and Indonesia are also in there. So what I would say about this is that support on the fiscal side has been relatively small in Indonesia compared to what other emerging markets have done. There are reasons for this, most of which are important reasons to talk about. It depends on how developed your bond markets are, how expensive it is to borrow, what is the capacity of local governments to be able to spend this money. But Indonesia's fiscal support has been relatively small compared to some of the other emerging markets. On the other hand, we have what was done in the middle with monetary policy. Bank Indonesia is very credible and has a very coherent and respected ability to implement monetary policy. And like all emerging markets, it has cut its policy rate since then and supported financial markets. So here, what I would note is these are sorted by where policy rates were in January of 2020. And the blue lines show where policy rates were in May of 2021. So the BI didn't do as much cutting of interest rates as some other emerging markets did. This has advantages and disadvantages to it, but what I would point out, because I think they outweigh the disadvantages, is that the policy here has been very prudent and very cautious. So policy rates have fallen and lending rates have fallen during the COVID crisis. Lending remains quite weak in Indonesia, and I will come back to that later. But what I would say is that we don't believe that interest rates are the main reason why lending has remained weak. There's just very weak demand in Indonesia and not a lot of need, and not a lot of companies are willing to borrow. So rather than try to continue reducing interest rates, which raises other risks, namely inflation, Bank Indonesia has lowered rates to a point that they think is consistent with relatively cheap credit, and they haven't gone any farther. And this is probably a smart thing to do, because in a lot of other emerging markets, rates have fallen farther. In some of those countries, demand has returned, so credit has returned. But Indonesia's inflation remains well below what most emerging markets are. So even though the policy rate here has not fallen by as much as in other countries, that probably has not, it's probably been sufficient. I think the central bank has done probably everything it can to support the economy, and we have not seen high inflation. So overall, I think that performance has been in line with what other countries do, or maybe a little more successful. And finally, countries have tried to keep banks and corporations liquid throughout the crisis using different programs. In Indonesia, the OJK, the Financial Services Authority, has tried to encourage banks to restructure the loans of creditworthy companies. Other countries have done similar things, often in a more targeted way, but Indonesia's plan is well in line with what other countries are doing. So next, please. As I said before, the vaccination is really the driver of how economies have recovered. So in Indonesia here too, the pace of vaccination started out quite quickly at the beginning of the year, but then slowed. Part of that was the difficulty of getting doses from India at a time when India was undergoing its own surge in cases. But the pace of vaccination has really accelerated in the last few months. As I'm sure everybody knows, the pace has been particularly strong in Jakarta and Bali, with the idea that Jakarta is the center of the country and the place where if you can control the spread of the virus here, it's probably easier to control the spread of the virus around the archipelago. And Bali, because it saw among all the provinces, Bali saw the biggest decline in economic activity last year because of tourism, and the government is hoping to reopen. So this, while Indonesia has a relatively low overall level of vaccination, 27% first dose, and I think it's now up to maybe 18 or 19% second dose, that pace has been uneven across countries, and Jakarta and Bali are moving a little faster. But it will be important to make sure that this pace is equalized across the country. So next slide, please. So before I mention what other emerging markets have done in the areas of fiscal policy, monetary policy, and supporting the financial sector. So I'll just talk about what the Indonesian Central Bank has done in these areas. So Bank Indonesia has been very active in trying to support the economy and the financial system. And there are three areas that I would point out about this. First is, as I said, they've lowered their policy rate to try to bring down interest rates around in the financial sector and make it easier for consumers and companies to borrow. I think that's been relatively successful in reducing the cost of credit, but as long as demand is weak, it's still going to be an issue. Second, I discussed before how there was a huge amount of volatility around financial flows last year. First at the beginning of the crisis and then over the summer. We saw capital leaving emerging markets and then we saw it come back in. During that time, Bank Indonesia has been very active in trying to stabilize the rupiah. So while there's been a depreciation of the rupiah and there has been some volatility, we have avoided the kind of sudden big decline in the value of the currency or a big increase in the value of the currency that can be very destabilizing. And the central bank has had quite an active policy to try to stabilize the market a little bit and reduce volatility. That's also been very successful. And the third area is that, as I said before, a lot of foreign investors sold Indonesian government debt in March and April of last year. Some of those investors have now come back, but the fact is that the deficit is much larger than it was last year, and the foreign investors have not fully come back. So that has left a hole in the ability of the government to finance, most of which has been filled by banks taking advantage of these very safe assets. So a lot of Indonesian government debt has been bought by banks, but also BI has intervened in the markets. There are some risks involved in these purchases, which I will come back to later, but the BI has gotten very involved in borrowing and buying government debt over the last year and a half or so, and that's an important development. Second, next slide, please. The second thing I would talk about is this restructuring policy, which the OJK has brought in. So this has now been extended until 2023, and the goal of the policy is to try to keep companies alive by restructuring their debts and lengthening them a bit more, giving them more time to pay. And the BI or the OJK at the same time has tried to encourage companies to do this proactively and try to be understanding with companies, but be reasonable about what the risks are. So at the moment, about between 20 and 25% of banks' loan profiles have been restructured under this mechanism. So what I would say about this is that there's always, any policy like this has advantages and disadvantages. The advantage is that this flexibility from the banks has kept a lot of companies alive. And because the banks in Indonesia tend to be very well capitalized, we haven't yet seen any serious problems with credit risk or with banks having to deal with a rapid pace of defaults. The disadvantage is that when you have these restructurings, it's difficult for banks to reclassify their loans as non-performing. At some point, banks have to acknowledge that this borrower may not be able to pay you back, even if the loan is restructured into the future. It's very difficult for banks to come to that kind of conclusion. This again is happening all over the world. I was talking today with the World Bank, and they are seeing this in a number of countries where it's difficult to make sure that the banks are adequately holding a cushion of capital against these potential risks. So no one expects 25% of Indonesian bank loans to go bad, but some of these loans will go bad. We don't know if it will be 3% or 5%. but banks have to be thinking about this early, and that is a potential risk that I'll come back to. And then next. And then finally, there's been a fiscal response. The Economic Recovery Program, Pemulihan Ekonomi Nasional, I believe, that has allowed the government to spend more over the course of the pandemic, mostly on health and social protection. And at the same time, tax revenue has fallen. So this has led to a bigger deficit. But what I would point out is that the government has designed a program to support the economy and to support, in particular, low-income people that has been very, very well designed. So they've really tried to focus on making sure there's enough money out there for testing and for hospitals, trying to support very small businesses to the extent they can, and to try to support the poor to the extent they can. Unfortunately, in any country, you run up against capacity constraints. It's difficult to spend this money effectively when there's so much going out, and you're always going to be limited by how effective local governments are at determining who is eligible for these programs. That has been an issue in Indonesia, and what it has meant is that a lot of the money that has been budgeted for these programs to support the poor and to support healthcare has not been spent. So that is a concern, that these programs are well designed, but there's always an issue of how efficiently they can be implemented. And unfortunately, that's a very slow thing and it's hard to change. So I'm trying to hurry up here a little bit at the end, but next, please. So how have emerging market economies responded, and how has Indonesia responded here? So next, please. So as I said, the global economy has begun to recover this year, and that has been led by China and the advanced economies. So exports and imports globally have recovered this year, and Indonesia and the other ASEAN countries have been no exception. So the first thing I would say about how Indonesia has recovered is that the external position in Indonesia's trade position with the rest of the world is quite strong. Though one reason for this is while exports have been strong because there's a lot of demand for manufactured goods and for commodities around the world, imports in Indonesia have been weak. And that isn't necessarily a good sign. That's mostly, or at least to a large extent, because consumption is relatively weak, consumers are buying less, and because investment is weak, because companies don't need to import to invest. So the trade position is quite strong, but that is partly because Indonesian demand is weak. So that is good news overall, but with some bad news underneath. Next, please. Capital flows have also stabilized a bit since the situation I talked about last year. So what I would point out here is that we saw a huge withdrawal of capital flows from emerging markets in March and April of last year, and then we saw more money coming in over the summer. And then in January of this year, as interest rates began to rise in the US, there was another period where we had some volatility and some concern about economic policy. But what I would point out is if you look at the premium for protection against default on sovereign bonds or on equity indices, the two things on the right, those have all been relatively stable for Indonesia over this time. So what that means to me is that at a time when, at least this year, these quantities have been relatively stable. So what that means is that even though we have this two-speed recovery, that has not yet led people to be so worried about Indonesia, both during the outbreak that we had in December and January, and then in the current outbreak, that has not led to people really marking down or drastically revising their expectations about Indonesia's long-term prospects. Financial assets in Indonesia have remained relatively stable during this time. So it would be better if they were rising, but that could also be a bubble. And it's certainly better than them falling and people being very concerned about the ability of the Indonesian government to close its deficit or the ability of Indonesian corporates to support the recovery. So this is what I would draw from this, is that the capital flows in and out of Indonesia have been pretty stable over the last few months. And considering how difficult the economic situation has been with the PPIE, that has to be seen as good news. So then next, please. And then these are some of the warning flags that I mentioned before. As I said before, credit has been weak in Indonesia for a long time. It did begin to recover in July and August of this year, as it looked like the economy was going to be recovering. But then as cases rose and the government instituted more measures to try to control the spread of the virus, we expect that credit began to fall again. But at least what we did see was that as soon as there was some more confidence about the recovery in May and June, we did see a return in credit, and we do need to see that return in credit to get back to higher rates of growth. And then also, as I said before, there is quite a large stock of loans at risk out there, about 20 to 25% of portfolios. Right now, non-performing loans, so the amount of loans that banks will eventually have to write off or likely eventually have to write off, that is relatively low at only about 3% of loans, but that is likely to rise as these OJK restructurings come to an end, though that will be quite some time from now. So next slide, please. So what is next, and what does the IMF think that Indonesia should do? So the first thing, which at this point it's very clear that the government sees this the same way we do, is that when the number of cases falls very quickly, our advice based on how other Asian countries reopened last year is that you should wait for cases to fall to a very low level before really beginning to relax restrictions. So in the end, that's exactly what Indonesia seems to have done. Here in Jakarta, it's only this week that things have really begun to liberalize. There was, restaurants were allowed to reopen a few weeks ago, but this week has also seen some major improvements. But this wasn't until cases had already fallen very dramatically from where they were before. So this is clearly an area where the Indonesian government has made some very sensible decisions, looked at the experience of other countries, and made some smart decisions. And then next. The next thing is to think about how do we begin to bring policies back to normal. So the fund's bottom line on all of these policies is that until the recovery is led by the private sector and economic growth is strong, it is too early to begin to think about bringing the deficit down, raising interest rates, or trying to change financial sector policies. So at the moment, Indonesia's recovery is not really underway yet. We're still very concerned about where growth is and what the prospects are. But in the next few months, we should have some more clarity about where things are going as the economy is opened up a little bit more. But what we would say is that for monetary policy, the central bank should look at how the financial markets are evolving, where inflation is going, and only when we see a real strengthening of demand should they begin to think about normalizing their monetary policy. On financial stability, it's the same thing. Banks should think about the creditworthiness of their portfolio, but at the moment it's okay to have these restructurings going on and to be encouraging companies to think about long-term profitability, and while at the same time making sure that you're not taking obvious losses by lending to companies that have no chance of returning to profitability. And then on the fiscal side, as I said, not all of the money that's been approved under the National Recovery Program has been spent, but we would hope that that spending can be strengthened, but that deficits we would not say that deficits need to be brought down until the economy has begun to grow again. Our forecast for Indonesia is that the economy will begin to recover pretty strongly next year, and that by 2023, we and the finance ministry agree that it makes sense to begin to think about getting the deficit back to this long-term 3% target. So there's two other points I'd like to talk about which have to do with the financial sector. So those are next. The first thing is that to try to increase the resilience of the Indonesian economy in the future, it would be good to think about how the financial sector interacts with the economy as a whole. And one area the first area I would point out is to try to provide Indonesian consumers, like your parents right now, and presumably you in the next few years, with better opportunities for saving. And the two areas where what I would note here are pensions and insurance, especially life insurance. Countries that have larger pension funds and larger insurance sectors tend to have more stable financial systems and tend to have more opportunities for people to be able to save both for their own retirements and also for the problems that they might have in life going forward, medical expenses or the need to take care of parents or children. Indonesia has a very small pension and insurance sector compared even to other regional countries or to other emerging markets. So developing these sectors, and this is a priority that the government has, would help make it easier for people to save money and more effective for people to save money, but it also tends to make it easier for there to be more long-term investment in the economy. And that long-term investment is important, especially for infrastructure and for funding climate change mitigation. So there's a huge humanitarian benefit to having these sectors because it really makes people's lives better. But at the same time, it also allows the government to invest in things that are pro-growth, like infrastructure, and that are pro-growth and will help strengthen the economy through climate change by investing in green technologies and green energy transmission and generation. So that's a key area for strengthening the Indonesian economy in the future. And then next. The other one is how to think about financial inclusion and digitalization. So this is another area where the BI has thought very hard about how to improve the quality of life. How can you bring more people into the financial system through digitalization? And what the fund has found is that this bringing in new people through digitalization not only makes it easier for people to, for example, start small businesses because it's cheaper for them to access payment systems, but it also makes it easier for them to start these businesses and thereby strengthen economic growth. So digitalization of the financial system, especially as it affects small businesses or low-income consumers, that makes everybody's access to the financial system better, which is always good. And on top of that, it pays real dividends in growth and can help strengthen growth. So again, this is an area where the BI has a plan to introduce payments and to try to support digitalization. That's all very important, and we think that would be good both for social policy and for economic growth in the long run. Though I would emphasize that this has to be done in a way that makes sure that consumers are protected. You don't want people ripped off by bad products, and also that make sure that the financial system is stable. This can be particularly difficult with a lot of decentralized finance and crypto. That's a huge challenge everywhere, but it's important to make sure that all of these new financial services that are being provided are done in a way that's safe. So that's my last slide, and I hope there are some questions, and I'm happy to answer anything. So thank you very much.
Thank you very much, Mr. Walsh, for giving us such an informative and excellent presentation about the current issue in Indonesia economic, especially during the COVID-19 outbreak. Well, ladies and gentlemen, I already had some questions in the chat Twitter. To make it efficient, I will group the question based on the similarity of the question. The first question is it's about financial and capital matters. It comes from Advis Budiman, PhD student, and Safira, a master student of Faculty and Economic Business. About the capital, Mr. Walsh, divergent recovery around the world will bring some risk of capital outflow for emerging economies. Is there any taper tantrum risk will impact on Indonesia economy as we had seen in 2013? And what should authorities do to reduce the impact? The second one, Safira asked about the financial support from the government, such as injecting SOA and accelerating its plan. But on the other hand, banks in Indonesia suggested to choose selected industry only even the company is as SOA. What do you suggest about this contradictory situation? Please answer, Mr. Walsh.
Thanks. These are great questions. Well, one thing I would say is that when I do this presentation for investors or for banks, I get the same questions. So you're well on your way to asking the same kinds of questions that you'll be asking professionally in 10 years or so. So how will capital flows affect potential risks? So in 2013, for people who might not know what happened that year, the Fed had engaged in very expansive policies that had bought a lot of US government debt and other private sector debts to try to support the US economy. And there was a question about what it was going to do when these policies were no longer necessary. So the Fed announced in 2013 that it was going to taper off its purchases of these bonds and then begin to think about normalizing policy. And just the announcement that they were going to taper off these purchases to gradually reduce them led to what we call the taper tantrum, where investors became very frightened and pulled a huge amount of money out of markets all over the world and put it into safe assets. And what this meant for a lot of emerging markets, but specifically Indonesia, India, South Africa, a few others, was that there was a huge sale of foreign holdings of Indonesian government debt and a big increase in interest rates and a weakening of the rupiah. So, of course, now the Fed has engaged in very similar and even larger policies with this cycle. And the question is, how will they communicate a return toward normal policy after this is over? And will the same thing happen again? So there are 3 points that I would make about that. First is the Fed was taken by surprise in 2013, and they have learned that lesson, and they're trying to be very cautious in communicating how they will unwind these policies this time. So they've already begun to talk publicly about how they will begin to reduce purchases and under what circumstances they would reduce them. So it already seems that the risk of a Fed miscommunication is lower. So it doesn't seem like they're making the same mistake this time that they made last time. They still could. This is a much larger program to unwind, but so far they've been very effective in communication. The second point is, and I think this is the most important one, is that the Indonesian economy is much less vulnerable than it was in 2013. For one thing, the current account deficit at the time was quite large. So what that means is that the difference between what Indonesia was investing domestically and what it was saving was very large. That's what the current account deficit is. And if a country is investing more than it's saving, it has to borrow that additional money from other countries. And when that deficit is large, and when you have this shift in investor preferences that takes money out of the economy, that has a huge impact on the rupiah and on interest rates. So this time around in 2021, the current account is very close to being in balance. It's a much smaller deficit. So this time the country does not need to borrow as much from the rest of the world as it was doing back in 2013. That means that this vulnerability is much reduced compared to what it was last time. So even if the Fed did the same kind of miscommunication and there were this shift in global investor preferences, Indonesia is in a much stronger position now than it was then. The current account deficit is smaller, as I said, but the country's reserve position is also very strong. The Indonesian central bank has more than $140 billion in foreign reserves that it could use to try to stabilize the markets and calm things down. And on top of that, there's a lot of policy credibility that has been gained over the last 8 years. Under Governor Perry, the central bank has a reputation for being very active in how it manages the rupiah and how it has controlled inflation. So I think there's a lot more confidence in the Indonesian economy broadly than there was in 2013. So that's the second factor that I would say. And then the third one is that while the global economy is in this position where there is has been a lot of active intervention by central banks in markets, I think there's a little bit more of an idea of how the economies will recover now than there was in 2013. In 2013, we had the global financial crisis and then a very slow recovery in a lot of countries. And then we had the euro area crisis only a few years later. So there was really a lot of uncertainty about global prospects. That uncertainty is also there now, but the uncertainty now is related to the virus. And we have seen economies recover very quickly from the virus. And so far, we don't have the same kind of overhang and slow growth that we had before. So while there is a huge amount of uncertainty about where economies are going to grow, I do think we have some idea that if we can get the virus under control, then the prospects are pretty good. So, but I would say the main thing here is that Indonesia is just in a stronger position now than it was back in 2013. So I think it's possible that this could happen again, but I think it's much less likely than it was then. And the Indonesian authorities that was another point. The authorities have the tools to deal with this that they may not have had before. So as I said, the central bank has a great deal of credibility, and they have been able to handle very well the turmoil that had happened last year around the pandemic. So I'm quite confident that they can handle it this time as well. So that's what I would say about capital flows and the potential for another taper tantrum. I'm just going to take some water before the next question. The next question was how to get banks to lend. So a colleague of mine at the IMF wrote a working paper a long time ago on what he called lazy banks. So what he meant was banks in many countries, though not Indonesia, will tend to buy government debt, and they don't lend to the private sector. And that does happen in quite a few countries. This is a real problem in a lot of low-income countries like Africa. The next problem countries tend to face is that once companies begin to get large enough that banks can lend long-term to companies, then banks will only lend to state-owned enterprises. And that seems to be happening in Indonesia. To be honest, it happens everywhere. It also happens in China, Brazil, Argentina, India. State-owned enterprises always seem to have preferred access to credit. There are two policy responses that you can have to this. The first one, I would say, and this is very standard IMF advice, is that you need to make sure that banks are adequately measuring the risks that they have across their portfolio. So banks often don't want to lend to smaller companies because they don't think that smaller companies will pay them back. This is often a problem. In general, small companies will go bankrupt. A lot of small companies do go out of business. But banks should be able to charge an interest rate that's consistent with this risk. And it should, ideally, it would also be consistent with these smaller companies or private sector companies being able to borrow. And the reason why that interest rate is not always consistent with the profitability of these companies is because banks aren't good at managing their own credit risks. They wind up having to write off loans that they shouldn't have given, or that turned out to be not as good as they thought. And because of that, their costs are higher. So what you want banks to do is manage their credit risk well, and that allows them to reduce as they become more profitable. Then they will compete over lending to these profitable private companies. So what are some of the things that make it difficult for banks to reduce these margins? One of them, frankly, is lending to big state-owned enterprises, which in some cases do not pay back their loans. They will extend their loans by a longer period of time, or they won't always pay on time. To the extent, I don't know to what extent this happens in Indonesia, because I don't have access to these records with banks, but this happens with a lot of state-owned enterprises around the world. Banks have to manage these risks well, because that will make it easier for them to lend to private companies, and they have to adequately understand the risks that come from lending to state-owned enterprises as well. The second thing I would suggest, which is also quite difficult to do, is state-owned enterprises should reduce their borrowing from banks. And there are two things that they can do about this. The first one is when banks lend, they're supposed to think about how their risks are managed across the entire portfolio. And they're supposed to diversify those risks. And banking regulation should always be undertaken in such a way that no bank is going to be threatened by having all of its risks in one basket. So for example, it's never a good idea to have a bank that only sells mortgages in one area, because then if that area goes into a recession, a lot of those loans will go under, and then the bank will go under. Banks have to diversify their risks. So you want them to have loans across a large range of areas or across a large range of sectors. This can be difficult to do with small banks, which is why small banks are often less profitable, but big banks should be able to do that. So what I would say here is that to the extent that banks are lending overwhelmingly to state-owned enterprises, that is concentrating all their risks in one basket. Banks often don't think of state-owned enterprises as having risk to them, because they think that the government will bail them out. This is a conceptual kind of issue. The government often will bail out state-owned enterprises, but the fact is banks should not be overwhelmingly lending to one borrower. And in this case, that borrower is the state. So state-owned enterprises this is part of how banks should be regulated. They should be regulated in such a way that encourages banks to view state-owned enterprises as a potential risk and move into the private sector instead. And then on the side of state-owned enterprises tend to borrow from banks, especially public banks, because it's easy for them to do so. It's harder for them to set up bonds and to sell bonds, especially to foreign investors. So this some of the Indonesian large state-owned enterprises do sell bonds, PLN and Pertamina do, but they should not be reliant on the banks for credit, and state-owned enterprises in general shouldn't be reliant on banks for credit. So as I said in my presentation, developing insurance and pension funds is a way to strengthen the financial sector. And this is exactly why. Most state-owned enterprises tend to be large and they tend to be quite established. So if Indonesia had a bigger bond market, they could sell bonds in this market, and that would reduce their need for bank credit. And it might, even if it's not cheaper for them to sell bonds, they should be, because you want the banks to be focused on this lending. So developing insurance markets and pension markets, that helps create more demand for the government for bonds that state-owned enterprises could sell. And that would free up more capital at the banks for them to lend to the private sector. So this is a very common problem all over the world, is that companies prefer to lend to state-owned enterprises. When I worked on China, China has very rapid growth, but even there, the large banks are very focused on the state-owned enterprises, and especially very small companies often have to go to small banks or to informal lenders, and they really should be going to banks, but it's a difficult problem to solve, and that's my suggestion on how to deal with it. But as I said, it's a very hard problem to solve, and it's a very common one. So thanks for the question.
Okay, thank you, Mr. Walsh. The second question is about vaccination rate. It's come from Nur Latifah, PhD student. As you mentioned, there is a divergence vaccination rate between advanced, emerging, and low-income countries. Well, all countries face the same COVID-19 pandemic and the impact of it for their economics. If vaccines are still dominated by developed countries because of their capabilities, while low-income countries do not have the ability to produce vaccine, the war against the virus will not end, and the world will not be free from the pandemic. The question is there any initiation from IMF or United Nations to help low-income countries to get vaccination? Please, Mr. Walsh.
Yes, the United Nations has a very large program to try to support vaccination in low-income countries. The World Health Organization and the United Nations Development Program have worked together with a lot of other organizations to try to make it easier for low-income countries to source vaccines. These programs are largely aimed at countries that are much poorer than Indonesia. So Sub-Saharan Africa would be the primary beneficiary of this, but also some of the countries in the Middle East, East Timor, Cambodia, relatively low-income countries. It's not obvious to me that these programs would benefit Indonesia, where the government has actually been able to buy. The issue in Indonesia hasn't necessarily been the funding for the vaccine as just the supply and the distribution. So on the one hand, there's only so much that the UN has tried to work to increase vaccine production around the world. But as long as the advanced economies have been buying a disproportionate share of the doses that are out there, it's going to be a challenge. So Indonesia falls in this category where it's difficult, it's expensive to get the vaccine here, and it's expensive to distribute. So what the UN would try to do is to try to support greater production of the vaccine and better sharing, especially among low-income countries, and also to work with countries like Indonesia on how to distribute the vaccine. The IMF doesn't really have any expertise in vaccine production or in distribution. So what we've tried to do, what we view our role as, is to try to make sure that countries have sufficient government funding to be able to buy vaccine doses and to vaccinate people. This is, every rupiah or dollar spent on vaccinating people, especially in low-income countries, but really anywhere, Indonesia, China, Brazil, that has a tremendously positive return. It saves every vaccine dose has the chance of saving somebody's life, and it certainly makes it easier for people to return to work and for kids to return to school, which is a huge problem. So what we see our role as is to try to make sure that governments have enough money to buy these vaccines. And we hope that the other UN agencies and that governments working together can make sure that there's a system set up that can make sure that enough vaccine is produced for everybody and that it gets into the right countries and into the right arms.
Okay, thank you, Mr. Walsh. The third question is about the growth source after the pandemic. It's come from Desita, graduate student at Faculty of Economic and Business Universitas Indonesia. Mr. Walsh, what do you think about the source of economic growth after the pandemic in Indonesia? Which economic sector should be prioritized? It is service sector or industry sectors? Please answer the question, Mr. Walsh. Thank you.
So if I were good at picking which sectors would grow, I wouldn't work at the IMF. I would be an investor and I would have retired already. So my advice on which sectors are going to grow is that you can't predict in advance which sectors are going to grow. Indonesia's manufacturing sector has done very well over the last few months, the last year, as the global economy has begun to recover. I hope that that continues. I think that's very important for the country going forward. But the service sector is also going to be important. The one sector that I would hope would be able to grow is tourism. Tourism collapsed last year, as everybody knows. So as the economy begins to open up again, and as Indonesia recovers a bit, and people begin to come in, that will, just because the level right now is so low, tourism should grow very quickly when it begins to reopen. But I think the way that I would think about this question is we can't pick in advance which sectors are going to grow. In general, when countries have tried to choose sectors that they think will grow, they wind up throwing a lot of money away and wasting it. What has worked the best over the long run is to try to make sure that you have a supportive economic environment that allows the most competitive economies to grow, most competitive sectors and companies to grow. So what I would say has been successful about that is making sure that banks manage risk and that banks are not, as we said before, focused on buying government bonds and the loans to large state-owned enterprises that are already quite successful. We should try to make sure that banks are able to lend to the private sector. It's important to keep the economy open to competition. Different countries have pursued different strategies for trying to develop new sectors, but it's very clear that the exports, making sure that your companies are globally competitive in export sectors is the best way to grow. And making sure that there's sufficient capital for companies to be able to invest in those sectors is important. So you may not be able to pick which sectors are going to be successful beforehand, but by having a financial sector that's able to lend to high growth sectors or to high potential sectors, and by having an external orientation that makes it easy for foreign capital to come in and train people and for companies to export when they are successful. Those are certainly the best ways to grow. And in general, I think that's worked for Indonesia. There are certainly quite a few areas where Indonesian exports are relatively strong. And around the region, there are other success stories where countries have been able to do that. So that's what I would say about choosing sectors.
Thank you, Mr. Walsh. Maybe in the last question, there is a lot of question about policy response. The first one comes from Ahmad Bahiran, PhD student at Faculty and Economic Business, GAI. The outlook depends not just on the outcome of the battle between the virus and the vaccination. It is also hints on how effective economic policy deployed under high uncertainty can limit lasting damage from the unprecedented crisis. What is your suggestion? The second one comes from Tiara, master student from University of Indonesia. The possibility of third wave of COVID-19 in Indonesia has been predicted by several experts. The question is, as a recommendation to mitigate the riskier effect of the third outbreak, what policies should the government of Indonesia imply? And the policies both in monetary and fiscal that has been done during the first and second wave, example quantitative easing or tax subsidies, could remain relevant to be implemented. The third one, the last one, it's the question comes from Nadif, master student from FEB UI. To restore the budget deficit to the statutory limit of 3% of GDP by 2023, the government needs to consolidate fiscally. What is the best strategy that Indonesian government needs to do in conducting fiscal consolidation to restore the health of the state's budget as before the pandemic? Please answer the question, Mr. Watt. Thank you.
Thank you. I'm not sure I understood the first one. Could you please repeat that one?
The first one.
Yes.
Okay. The outlook depends not just on the outcome of the battle between the virus and vaccine. It is also related how effective economic policy deployed under high uncertainty can limit lasting damage from this crisis. What is your suggestion?
Okay. I think I'll go in reverse order of how they were asked. So the first one, because I think the second and third question will feed into the first one. So the last question was how to get back to the 3% budget target by 2023. So the government feels very strongly that they can get back to this target by 2023. So the two areas where I think their policies are focused are first on the expenditure side. They feel that there's been an increase in spending related to COVID that they can reduce a little bit to try to bring expenditure down. Our view is that there's a lot of social needs in Indonesia, and we would want a lot of these social areas to be covered with more, to gain more fiscal support in the long run. But some of the things related to the cost of vaccinations, for example, ideally we will have everybody vaccinated by 2023, so we won't need to spend money on that anymore. As the economy recovers, we won't have to spend as much supporting small and medium-sized enterprises. Ideally, the poverty rate would begin to decline as more people get back to work, and we wouldn't need to support households as much. So there are some areas where there will be some savings in spending as the economy normalizes. So that should begin to bring the deficit down. The second area is the revenue side. And there's a natural increase in revenue as the economy recovers. People will pay more income tax, people will pay more VAT, there will be more corporate income tax, so there will be a natural recovery that will bring the deficit down. On top of that, and I think this is the most important thing, is that the government is contemplating a big change to the tax system. And if you were to compare Indonesia's tax revenues to other countries, they're relatively small. No one likes paying taxes, and everybody thinks their taxes are too high. But the fact is that Indonesia collects relatively little in VAT and income and corporate taxes. The total tax take compared to other emerging markets is very small. It surprised me when I came to work here that the tax revenue ratio was so low. It's significantly higher in other countries in the region like Thailand, Malaysia, the Philippines. They're just able to collect more taxes. So what the government is trying to do is simplify the tax structure in a way that makes it easier for them to collect revenue and improve administration to make sure that there's less tax evasion. They're also planning to increase the VAT rate to try to bring in more tax through VAT and simplify the system so that more revenue is actually brought into the government. And they're also contemplating some changes to the income tax that should bring in more tax revenue from high income individuals. So all of these will help increase tax revenue. It's not clear to me over what horizon this would happen. Ideally, as the economy begins to recover, these tax changes would also take place, and then the economic recovery that we expect and more rapid growth, more of that would be caught in terms of tax revenue, and that would bring down the deficit more quickly. But that's how I expect them to be able to reduce the deficit, is through a little bit of less spending, through the natural recovery of tax revenue, and then through these new tax reform measures. We'll see. It's a very difficult challenge. I think they're well aware that it's a difficult challenge, but they're also quite confident that it can be done. So I think that's how they plan to do it. So the second thing is, at least as I understood it, was how do we mitigate the risks of the outbreak and what policies will remain? How do we think about these short-term policies and how they'll be effective in the long run? So for this one, I would focus on what BI has done, since you mentioned quantitative easing. So Bank Indonesia has bought a lot of government debt over the course of this crisis. Central banks around the world have done that. The Federal Reserve Board, the European Central Bank, Bank of Japan, they've all bought a lot of government debt during this crisis. So the first stage in thinking about these policies is thinking about how do we go from a policy where we are stimulating the economy to one where we are neutral. So as we've done all this quantitative easing and these unconventional monetary policies, we have some experience with this first stage from the 2012 crisis. So central banks, the BI, the Fed, the European Central Bank, will have to begin to communicate how they're going to slow down these purchases and eventually stop them. So that did happen back in 2012 and 2013. As I said before, that's what initiated the taper tantrum. This time around, the Fed and the ECB have already begun to explain that they will begin to reduce purchases. Eventually, Bank Indonesia will do the same. Bank Indonesia doesn't need to do that until there's evidence that the economy has begun to grow again. So far, they've said in their monetary policy statements that they feel the current level of support is appropriate. The IMF agrees with them on that. But as the economy eventually recovers, they will have to begin to communicate the reduction of these purchases. After that first stage where you reduce the purchases, then you have to think about countercyclical policy. And it may be if inflation begins to recover, how do you deal with inflation again? So this is already an issue in some emerging markets. So in Russia, Brazil, I think Mexico, there's already been an increase in interest rates because inflation has recovered. Indonesia is quite lucky that this hasn't happened so far, and that the same inflationary pressures that we see in other countries haven't happened here. When that does happen, that will be a challenging policy adjustment to do. So before we had quantitative easing and large-scale unconventional monetary policies, central banks would look at what was happening to inflation and raise policy rates accordingly. Now, this large scale of quantitative easing means that it's a little more complicated for central banks to do that. As ideally, you would want. It's a little more challenging now because the central bank has put so much money into the economy through quantitative easing that they're effectively paying banks to keep this money in the economy. And right now, the rate at which they're paying the banks to keep this liquidity in the economy, which is the reverse repo rate, is relatively low. But as the economy begins to normalize and activity begins to recover and lending recovers, the central bank will have to pay more to keep this money in the economy. Now, it's quite possible that when this occurs, the central bank will not have to pay this interest rate on as much of balances as they do now. But it's a challenge that they'll have to deal with when it comes up. And it's also a challenge that many central banks have not yet dealt with. The European Central Bank and the Bank of Japan never had to deal with this because after their quantitative easing programs in the global financial crisis, they never raised rates again. So this wasn't an issue. The Fed did have to deal with it a little bit, but rates never went up very high. The concern is that when Indonesia has to do this, it could be quite expensive and it could be a difficult transition to do. It's kind of a complicated and very technical problem, and it's very new. We've never really dealt with this before. The most I can say about it is that Bank Indonesia very clearly understands what the challenge is, and they're thinking about it, and they have a strategy that we tend to think is quite a respectable strategy. They're going to begin to reduce these purchases when they come. They're aware that it could become expensive to deal with these purchases in the future, and they're trying to think about how to handle that. And they're quite confident that this can be done without allowing inflation to get out of control or destabilizing the financial system. I would give them the benefit of the doubt in this case. I agree it's going to be difficult, but the fact that they're looking at it gives me a great deal of confidence that they're aware of what the problems are and they're thinking very hard about how they'll solve it. I think they have a wide range of tools to deal with and some cushions if there's problems that come up or hiccups in the system. So I think it's a difficult challenge to normalize these policies, but I do think they'll be able to do it. And then the first question that was asked, but the third one I'll answer, is how to limit lasting damage from the crisis. So the first one I would say is that bringing the deficit back into line and being very clear and very effective about monetary policy implementation. These are crucial keys to limiting the damage over the long run, because what you need to do to support growth in the long run is have a stable overall management of the economy. And as the economy begins to recover, it's going to be this unwinding of policy. So returning the deficit to the target and reducing asset purchases. Normalizing those policies will be key to making sure that the economy is in a position to grow in the long run. So if you want to reduce this kind of damage, you have to make sure that the economy is credible, the economic policies are credible, and that inflation is under control, and that government borrowing is under control. So that's the first step to reducing this damage in the long run. The second one is, and I said it in my presentation, but I think it's extremely important, is making sure that banks are adequately managing the risk from these restructured loans. So there's a very large share of loans out there that are being restructured and that the banks are allowing people to pay them back a little later. But some of these borrowers will not be able to pay the banks back under any circumstances. And when that happens, the banks, the rules that the banks follow and that OJK enforces say that the banks should begin to hold some capital against those future losses. The banks have to be very objective in doing this and be very clear about reassessing over time which borrowers are not going to be creditworthy in another year when the OJK provisions expire. Oh no, now it's a year and a half. And in that case, they have to begin to think about what capital losses they will face, and they have to be thinking about how much capital do they need to set aside now. It's always better to solve these problems earlier than later. And there's always a temptation for banks to say, oh, well, this company, we were not sure if they're okay now, but we think they'll be okay later. They will not be okay later, and it's better to write it off. Otherwise, you just wind up with a bigger debt further down the road and more capital that you have to put into it, and that causes more damage later on. This is a policy lesson that countries all over the world have to deal with, that it's better to impose objective assessments of credit early and deal with these losses earlier than later on. So those are the three policy areas that can reduce damage in the future. The other thing I would note is that there's a lot of scarring that's done to the economy just from people being at home and from the PPIE, these restrictions. And the most important one of those is kids in schools. All over the world, we're going to have a huge problem of children not going to school for a year. This is very clear already in Europe and the US, where kids are back in school, that the school districts that spent more time open were able to provide a better education than kids were at home. In Latin America and in Indonesia, a lot of other places, kids really were, it was very difficult to teach kids from home. And because of that, kids will have lost a huge amount of schooling. And we don't know what the effect of that is going to be. The only thing that we can do is try to minimize the damage from kids being kept at home by making sure that parents are vaccinated, that teachers are vaccinated, that there's mask wearing in schools to reduce the transmission of the virus. But getting kids back in school in a safe manner is, in my view, the most important thing you can do to reduce scarring in the long run. I'm going to have to go in about 5 or 10 minutes, but I'm happy to.
Okay. Thank you, Mr. Walsh. Thank you, Mr. Walsh. Ladies and gentlemen, due to the limited time, we do apologize that we can't answer all the questions given. However, we understand the question as it is also our concern. That is the end of question and answer session. I do hope all questions has been answered clearly by Mr. Walsh. Ladies and gentlemen, we finally come to the end of this public lecture. I would like to take conclusion from the speaker has presented. Like most other countries in the world, Indonesia's economy was affected by the COVID-19 pandemic. Indonesian economy contracted at 2.1% year-on-year in 2020. The world economic growth expected better in 2021 for most countries with higher vaccination rate that could grow stronger, but some countries will still have low vaccination rate. Countries also have different policy support. As a result, divergent economic recovery expected to continue in 2022. Fiscal, monetary, and financial system response has been made to mitigate the impact of COVID-19 pandemic on the Indonesian economy. From the fiscal policy, there is the National Economic Recovery Plan, or PEN, to accelerating the handling of COVID-19 outbreak and to restore the national economy. The monetary policy used 3 lines of defense, decrease the policy rate of 7-day reverse repo gradually from 4.25% to 3.50% until now. The central bank also uses triple intervention strategy to stabilize the domestic market condition and purchase the government bond in the primary market. For financial system stability, OJK extending loan restructuring policy, applying the risk management and prudential principle, reducing risk weight, house collaterals, and vehicle loan. And the last one, what are the priorities going forward for Indonesia economy? Restrictions have a noticeable economic impact, but letting the virus spread has caused to confidence that is less clear. Although vaccination seems the key to economic recovery, more vaccinated countries are recovering faster. So Indonesia should accelerate the vaccination rate, especially outside Java and Bali Island that still have low vaccination rate. The second one, fiscal policy should be arranged to reach a credible and accountable deficit at 3% of GDP. The last one, when the economy reaches the new normal, the central bank should have an exit strategy for purchasing government debt, gradually reducing other asset purchases and raising interest rates. Ladies and gentlemen, before leaving the Zoom meeting room, we have a photo session. Please make your camera on and put your best smile. We take berapa kali Mbak Mila mau ambil foto? 2 times? We take
7 slide.
2 times ya Mbak?
Ya Mbak. Ya Mbak.
The first one. 1, a count of 3, right? Okay. 1, 2, 3. The second one. 1, 2, 3. Is it done, Mbak Mila? Sudah, Mbak Mila?
Belum, Mbak. Lagi ya.
Oke. 1, 2, 3.
Sekali lagi.
One more. 1, 2, 3.
Oke, Mbak. Terima kasih.
Thank you. I want to thank to Mr. Walsh for the exciting and excellent presentation and all the participants for the very active during this public lecture. Thank you for joining us today and see you on another occasion. Stay safe and healthy. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Thank you, Mr. Walsh. Have a good day.
Terima kasih.
Ya, terima kasih.
Budia, ada penutupan atau langsung selesai ini ya?
Langsung selesai aja, Mbak.
Okay. Mr. Walsh, you can exit the meeting room. Thank you.
Thank you very much, Novi. Thank you very much.
Thank you. Have a good day.
Ya. Bye.
Terima kasih Bu Dia,
Ya.
Mbak Joni dan teman-teman. Makasih Mbak Novi.
Sama-sama,
Terima
Mbak.
kasih ya, Mbak Novi ya.
Ya, sama-sama, Ibu. Izin live ya, Ibu.
Oke, aku end ya.
Ya, terima kasih, Mbak.